From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm Jim Lineweaver, your financial quarterback since 1993. Here with me today is Landon, who is joining us to talk about blockchain, decentralized finance, cryptocurrency, and how digital assets may change the financial system. So Landon, let's start at the big picture. What's really changing?
Yeah, so traditional finance is built around centralized institutions like banks. These centralized institutions and exchanges and governments, they approve transactions, they move money, and they often charge fees in order to do this. So blockchain creates a different model. It's a digital ledger. It's a shared digital ledger where you have a peer-to-peer network recording these transactions, and it removes the intermediary from the process.
Okay. And so if really I was to draw an analogy, so if the internet digitized information, blockchain may digitize value, ownership, trust, things along that nature?
That's a very good way to think about it. Bitcoin is often viewed as a store of value, while Ethereum and other blockchains allow for what we call smart contracts. And smart contracts are self-executing programs. They automatically enforce rules such as, if this happens, then do that. That could eventually reduce the need for certain intermediaries and lower cost and speed up all of these transactions that we do across the board.
Yeah, and that's where decentralized finance, or what they call DeFi, comes in, right?
That's exactly right. So decentralized finance is essentially an attempt to rebuild parts of the financial system using these smart contracts. It includes decentralized exchanges where people can trade without a traditional broker, lending and borrowing programs, stable coins tied to currencies, government currencies. Investors provide capital to blockchain-based systems. There's also tokenization, which means representing traditional assets like stocks, bonds, real estate, or even art on a blockchain, removing the intermediary.
And that's where Wall Street's paying attention, because tokenized assets could mean faster settlement, lower cost, fractional ownership, and maybe even 24/7 trading.
That's exactly right. But it's important to separate the technology from the hype. Some of this it becomes very important, but there are still real risks, including regulation, cybersecurity, liquidity, and significant volatility of these assets.
The takeaway is that blockchain is not just about crypto prices. It may be part of the future infrastructure for money markets and ownership.
That's exactly right. So the old system probably doesn't disappear overnight, but parts of finance may gradually move onto blockchain rails where it improves speed, transparency, and efficiency.
Yeah, so as always, the goal is not to chase every new trend. It's to understand what's changing and how it may affect your broader financial plan. So if you have questions about digital assets, blockchain, or your investment strategy, visit our new website at lineweaver.net or call the number on your screen. Here's Fox News Sunday.